Hello, and welcome back to Boni's Life, your go-to channel for making sense of the wild and wonderful world of cryptocurrency. I'm your host, Boni, and I'm thrilled to have you with me today as we dive deep into the crypto market's latest moves. It's been an interesting few days, to say the least. The market has been moving with the kind of energy that could power a small city, or at least my coffee machine for the next decade. We've seen some sideways action, a little bit of drama, and a whole lot of anticipation. It's like watching a high-stakes poker game where the players are all algorithms and the chips are worth more than my car. But don't worry, we're going to break it all down for you piece by piece, so you can navigate these choppy waters like a seasoned captain. Over the next 30 minutes, we're going to dissect the past 3 days of market performance with a special focus on the last 24 hours. We'll be looking at the technicals, the fundamentals, and all the global events that are shaking things up. And of course, we'll be hearing from some of the brightest minds in the industry: the traders, the developers, the regulators, and the big shot institutions that are shaping the future of finance. So, whether you're a seasoned pro or just starting your crypto journey, you've come to the right place. Grab your coffee, get comfortable, and let's get into it. It's going to be an exciting ride, and I promise to keep the jargon to a minimum. Well, mostly. A little bit of technical talk is good for the brain, right? It's like a workout for your financial muscles. Let's get those gains. All right, let's kick things off with a look at the charts. Now, I know what some of you might be thinking. Oh no, not the charts. It's all squiggly lines and confusing acronyms. And you're not wrong. It can be a bit intimidating at first, but trust me, understanding the technicals is like having a superpower in the crypto market. It's the art of reading the market's mood, and right now the mood is cautiously optimistic. It's like the market is on a first date. It's putting on its best shirt, trying to be charming, but it's also a little nervous about what the other person is thinking. Let's start with the big dog, Bitcoin. Over the past 3 days, Bitcoin has been trading in a relatively tight range, hovering between $115,000 and $116,000. Think of it as a boxer in the ring, dancing around, testing its opponent, but not quite ready to throw a knockout punch. The price action has been mostly sideways, which we call consolidation. This is actually a healthy sign. It means the market is taking a breather, catching its breath before the next big move. We've seen a slight dip in the last 24 hours, but nothing to write home about. It's more like a gentle wave than a tsunami. The daily chart shows that we are still in a clear uptrend, with a series of higher lows, which is a classic bullish signal. It's like climbing a staircase one step at a time. As long as we keep going up, we're in good shape. Now, let's get into the nitty-gritty. The Relative Strength Index, or RSI, is currently sitting at around 59. For those of you who are new to this, the RSI is a momentum oscillator that measures the speed and change of price movements. It ranges from 0 to 100. Anything above 70 is considered overbought, and anything below 30 is oversold. At 59, we're in neutral territory but with a slight bullish bias. It's like the market is leaning forward, ready to sprint, but it hasn't taken off just yet. This is a good thing. It means we have room to grow before the market gets overheated. Next up, we have the Moving Average Convergence Divergence, or MACD. I know it sounds like something out of a sci-fi movie, but it's actually a very powerful tool. The MACD is a trend-following momentum indicator that shows the relationship between two moving averages of a security's price. Right now, the MACD is showing some very interesting signals. The MACD line is above the signal line, and the histogram is in positive territory. This is a classic bullish crossover, and it suggests that the upward momentum is still strong. It's like the market has a tailwind, pushing it forward. The MACD histogram, which measures the distance between the MACD line and the signal line, is at 638, which is a very strong reading. This tells us that the bulls are in control, at least for now. But it's not all sunshine and rainbows. We also need to look at the trading volume. Over the past 3 days, the volume has been decreasing. This is a bit of a red flag. It's like a car running out of gas. It can still move forward, but it's not going to go very far. Decreasing volume during a consolidation phase can sometimes signal that the trend is losing momentum. It's something we need to keep a close eye on. If the price starts to break out to the upside, we want to see a big spike in volume to confirm the move. Otherwise, it could be a false alarm, a so-called bull trap. So, what does all of this mean for the average trader? Well, it means we're at a critical juncture. We're at a point where the market could go either way. The bulls and the bears are locked in a stalemate, and we're waiting for a clear winner to emerge. The key levels to watch are the support and resistance levels. Support is like a floor that holds the price up, and resistance is like a ceiling that pushes it down. Right now, we have strong support in the $114,000 to $115,000 range. As long as we stay above this level, the bulls are in good shape. On the upside, we have resistance at $116,500. If we can break through this level with strong volume, it could trigger a rally to our next target of $125,000. It's like breaking through a brick wall. Once you're on the other side, there's a whole new world of possibilities. Now let's talk about the rest of the crypto family. Ethereum, the second largest cryptocurrency, has been following a similar pattern to Bitcoin. It's been consolidating in a tight range, with the price hovering around $4,500. The technical indicators are also looking bullish, with the RSI in neutral territory and the MACD showing upward momentum. The key level to watch for Ethereum is the $4,600 resistance level. A break above this level could send the price soaring to new all-time highs. And let's not forget about the altcoins. We've seen some impressive gains from coins like Solana, which is up over 19% in the last week. This is a sign that the risk appetite is returning to the market and investors are willing to bet on smaller, more speculative projects. It's like the dessert after a big meal. It's not the main course, but it's where all the exciting flavors are. So we've looked at the charts, we've analyzed the squiggly lines, and we've got a pretty good idea of what the market is thinking. But that's only half the story. To get the full picture, we need to look at the fundamentals. Now, if technical analysis is like reading the market's mood, then fundamental analysis is like reading its diary. It's about understanding the underlying factors that are driving the price, the real-world events that are shaping the future of cryptocurrency. And right now, the biggest story in the financial world is the upcoming Federal Reserve interest rate decision. It's the elephant in the room, and everyone is waiting to see what it's going to do. For those of you who are not familiar with the Federal Reserve, it's the central bank of the United States, and it has a huge impact on the global economy. One of its most powerful tools is the ability to set interest rates. When the Fed raises interest rates, it becomes more expensive to borrow money, which can slow down the economy. When it lowers interest rates, it becomes cheaper to borrow money, which can stimulate the economy. Right now, the market is expecting the Fed to cut interest rates by 25 basis points. That's a quarter of a percentage point. It may not sound like much, but in the world of high finance, it's a big deal. A rate cut is generally seen as a bullish signal for assets like Bitcoin and other cryptocurrencies. Why? Because it makes traditional investments like bonds less attractive. When interest rates are low, investors are more likely to seek out higher returns in riskier assets, and that includes crypto. It's like a rising tide that lifts all boats. A rate cut could unleash a flood of new capital into the crypto market, pushing prices to new all-time highs. It's the rocket fuel that could send us to the moon. But here's the catch. The market has already priced in a 25 basis point cut. That means everyone is expecting it to happen. The real question is, what comes next? What will the Fed's forward guidance be? Will they signal more rate cuts in the future, or will they take a more hawkish stance? This is where the real drama is. If the Fed signals a dovish stance, meaning they are open to more rate cuts, it could trigger a massive rally in the crypto market. But if they sound hawkish, meaning they are concerned about inflation and may not cut rates further, it could send the market into a tailspin. It's a high-stakes game of chicken, and the whole world is watching. Now, let's bring in some of the experts. Sean Young, the chief analyst at MEXC, believes that sustained rate cuts could fuel stronger liquidity and drive cryptocurrencies toward ambitious price targets. He's looking at a Bitcoin price of $135,000 by the first quarter of 2026. That's a 17% increase from current levels. He's also bullish on Ethereum with a price target of $5,200 and Solana with a target of $280. But he also has a word of caution. He warns that if the Fed emphasizes ongoing inflation risk, the pressure on altcoins could be particularly intense. It's a reminder that the crypto market is not a one-way street. There are always risks involved. Paul Howard, the director at Wincent, has a similar view. He's also bullish on the market, but he's more focused on the institutional side of things. He notes that we've seen a record low volatility in the crypto market over the past 6 months, and he believes this is due to institutional accumulation. The big players, the pension funds, the hedge funds, they're all quietly buying up crypto, and they're doing it in a way that doesn't move the market. It's like a whale feeding in the deep ocean. You don't see it on the surface, but it's happening. Howard believes that this institutional accumulation will continue, and it will provide a strong foundation for the next bull run. And then we have the super bulls. Dan Moorhead, the founder of Pantera Capital, is predicting that Bitcoin could hit $750,000 in the next 4 to 5 years. That's a 548% increase from current levels. He argues that Bitcoin has been increasing twofold every year for the past 12 years, and he expects this trend to continue. He also points out that Bitcoin's share of global wealth is still tiny, at just 0.75%. He believes that as Bitcoin gains more mainstream adoption, it will capture a larger share of the pie, and that will drive the price to astronomical levels. And he's not alone. Cathie Wood of ARK Invest is even more bullish with a price target of $1.5 million by 2030, and Coinbase CEO Brian Armstrong is predicting that Bitcoin will reach at least $1 million by 2030. These are some mind-boggling numbers, and they show you just how much potential the experts see in this market. But it's not all sunshine and roses. We also have to consider the regulatory landscape. The crypto market is still the Wild West in many ways, and regulators are starting to take a closer look. The passage of the Clarity Act in 2025 was a major step forward as it provided a clear regulatory framework for the industry. This has been a major driver of institutional adoption, as it gives the big players the confidence they need to enter the market. But we're also seeing a crackdown on some of the shadier corners of the crypto world. The SEC is taking a more aggressive stance on enforcement, and this could create some short-term volatility. It's a classic case of 2 steps forward, 1 step back. But in the long run, a clear and fair regulatory framework is essential for the health and growth of the crypto market. So, where does that leave us? We've looked at the charts, we've dissected the fundamentals, and we've heard from the experts. The picture that emerges is one of a market at a crossroads. The technicals are telling us that we're in a consolidation phase, with the bulls and the bears locked in a tight battle. The fundamentals are telling us that the upcoming Federal Reserve decision is the single most important factor to watch. And the experts are telling us that the long-term outlook for crypto is incredibly bright, but that we should be prepared for some short-term volatility. So, what's the play here? What's the optimal trading strategy for the next 24 hours? Well, as always, this is not financial advice. You should always do your own research and make your own decisions. But if I were a betting man, I would say that the smart money is on the long side. The confluence of bullish technicals, a dovish Fed, and strong institutional demand is a powerful combination. It's like having a royal flush in a high-stakes poker game. You can't be 100% sure that you're going to win, but the odds are definitely in your favor. My advice for the next 24 hours is to be patient. Don't get caught up in the short-term noise. The market is likely to be volatile in the run-up to the Fed announcement, so it's not the time to be making any rash decisions. Wait for the dust to settle and then look for a clear signal. If we get a dovish statement from the Fed and we see a breakout above the $116,500 to $16,500 resistance level with strong volume, that could be the signal to go long. But if we get a hawkish statement and we see a breakdown below the $114,000 support level, that could be the signal to take some profits and wait for a better entry point. And what about the long term? Well, as you've heard from the experts, the long-term outlook for crypto is incredibly bright. We're still in the early innings of this game, and there's a huge amount of potential for growth. The institutional adoption is just getting started, and the regulatory clarity is only going to improve. We're at the beginning of a new financial paradigm, and it's an incredibly exciting time to be an investor. So, whether you're a day trader or a long-term hodler, there are opportunities to be had in this market. The key is to be informed, to be patient, and to have a clear strategy. And that's what we're here for, to help you navigate this exciting new world. And that's all the time we have for today. I hope you found this analysis helpful. If you did, please be sure to hit that like button, subscribe to the channel, and ring that notification bell so you don't miss our next episode. And as always, I'd love to hear your thoughts in the comments below. What do you think is next for the crypto market? Are you bullish or bearish? Let me know. Thanks for watching, and I'll see you next time on Boni's Life. Stay safe and happy trading.